Okay, I think we are on now. So, guys, hello and good morning, guys. Good morning, everyone. Good morning to this Thursday morning, an amazing morning. So, yes, please confirm if I am audible and visible to you. Am I audible and visible to you? And is my blackboard audible and visible to you? These are the two questions which I want you to answer me. Am I audible to you? Good morning, everyone. Oh, Tanupriya is on time today. Brilliant, Tanupriya. And Tanupriya is saying that I'm not on time. Yashika, Karishma. Good morning, Aditi. Pankaj Kumar. Bhai Sahab Rathod. What a name. Wah. Bhaiya Bhai Sahab Rathod. Kirti, Batra, Yashika. Tanya Bhatt, Meraki, Ishita. Good morning, Akanksha Priya, Diksha, Sadanand Patil, Deepika Raj Purohit. Rama Devi, Om Kakati, Shri Vidya. Good morning, everyone. And yes, welcome to this session. Ranjit N, Shri Lakshmi, Irene Anna Jones, Rohini Rohi. Good morning, everyone, and welcome to this session of income from house property. This is one of the small chapters of your syllabus, guys. But yes, from an exam standpoint, a very important chapter for intermediate students, because in the exams, a question of say about 6 marks is expected to be there from this particular chapter. And yes, it is an important chapter from a theory as well as practical standpoint. So both the standpoints are important in this chapter. So we are going to start income from house property today. Vihan, good morning. Jyotish, good morning. Neha, Gokul, Abhishek, Nandini, Shriyan, good morning, everyone. Good morning. All right. So now we are going to start our one of the most important chapters of our syllabus, which is income from house property. And yes, income from house property, as the name itself suggests. Guys, house property income means income which is derived from any kind of house property. So if you have a house property, if you have a building, if you have a land which you give on rent or you plan to give on rent, then that rental income will be taxed as income from house property. So yes, there are certain nitty-gritties, certain critical factors which are to be kept in mind while taxing the income from house property. That is important. So those factors are to be kept in mind. And in this particular chapter, we are going to study all those factors which are to be kept in mind while calculating the taxable income from house property. So yes, let's start. What is the brief introduction? What are we going to study in this particular chapter? This chart will tell us that. So what are we going to study? That's what is entailed in this particular chart. So number one, applicability. To whom is this chapter applicable? To what kind of income is this particular head applicable? What kind of income is taxable in this particular head? It is, we are going to study two things: that you should be an owner of land and building. You should be an owner of land and building to have this income from house property accrues only to those people, who owns land and building, land or building. Sir, what if I own plant and machinery? Would I not be taxed under this head? Answer is no, you will not be taxed under this head. So to be taxed under income from house property, you need to be an owner of land and building. That is the two prerequisite conditions which are required to be fulfilled to tax your income as income from house property. Then how do you compute your income? What is the computation of income in case of house property? How do you compute that income? So guys, we will divide this computation of taxable income into few parts. Parts are: number one, let out property; number two, occupied property; number three, partly self-occupied and partly let out property; number four, deemed to be let out property. So guys, whether your property which you have, which you own, which is land and building, either it is occupied by you, which is self-occupied, or it is let out to someone else, it is given on hire, it is given on rent to someone else, both the incomes will be taxable under income from house property. Sir, what is this, sir? This is unfair, absolutely grossly unfair. Sir, this is wrong, sir. Sir, when we have a self-occupied property, when we have a self-occupied property, when we are occupying that property, when we are staying in that property, so why should we pay taxes on that property in which we are staying? So this is wrong, this is incorrect. We cannot pay taxes on the property in which we are staying, in which we are we and our family is staying. So this is incorrect. How can you tax a property which is self-occupied? So we understand, and we are very much with you when you say that whenever you let out your property, you will be having taxable income and you will be taxed. We are with you, sir. But sir, we don't like this thought that occupied property, self-occupied property is also taxed. So we did not like this fact. I agree with you. I am fully with you in your emotional outburst, which is there. Absolutely, guys. This emotion is absolutely correct. But yes, there was a dire need to tax the self-occupied property in certain cases because people went over smart. People went out of the way to save taxes, to control on their taxes. They went out of the way and they started misusing the provisions of law. Therefore the law introduced certain provisions to curb tax evasion, and therefore self-occupied property came into net of taxability. I will discuss, I'll definitely keep these emotions which you have in my mind. Definitely these emotions will be respected. While teaching, I will tell you, your emotions are absolutely valid, and I will not let your emotions go for waste. Your emotions will be duly considered. That's if you are self-occupying certain property, so that should not be taxed because there's no income. Okay, agreed, point taken. So guys, sometimes there can be a partly self-occupied property, partly let out property. So half of the portion of the property is let out, half the portion is self-occupied. That can also be a situation. And in certain circumstances, property can be deemed to be let out. What do you mean by deemed? Deemed means assumed. We can assume that this particular property is let out even when it is not let out. We will assume in certain circumstances that it is let out. That is the deeming fiction, deemed to be let out house property. Then last thing which we are going to study in this particular chapter is deduction. So guys, this was income. How is the income calculated under income from house property? This was section number 1. Section number 2 will deal with expenses. What kind of expenses are we going to reduce from the income? The expenses are only two kinds of expenses are allowed. First is the standard deduction. Standard deduction, as we had already studied in a salary chapter also, irrespective of any expenditure incurred by the assessee, this deduction will be available to all the assessees. It is known as standard deduction of 30%. Whether you incur any expenditure or not for house property, for maintaining house property, we will allow you this deduction. It is standard deduction. Secondly, we have interest on loan. So for purchasing this particular house property, for buying this particular house property, you might have taken certain loan, and on that loan you might have paid certain interest. So we will tell you what are the limits according to which you will be able to deduct this particular interest on loan from your income. So these are the expenses, these are the incomes which you are going to deal with in this particular chapter. One very important thing which we are going to deal with, what will happen to recovery of area rent? So area rents means rent which are pertaining to the previous year. Due to some dispute between the landlord and the tenant, the rent was not received by you. Now, if past areas are recovered in the current year, how to treat them, how to tax them, that is what we are going to discuss in this particular topic. All right, sir, got it. So now, guys, let us first of all understand these two words. Okay, two words are very, very critical. First is the owner, second is land and building. Okay, owner and land and building. What is the meaning of these two words? Because these two words will be the basis of our taxability. They will determine whether the income will be clubbed under the head house property or not. So we are going to see what are these two words. First word is house property. Guys, house property only means land, building. No plant machinery, no commercial complexes, no places where commercial things are going on, etc., etc. So commercial buildings are allowed. Of course, commercial buildings are allowed. So land and building. So apart from land and building, no other property is termed as house property. No other property is termed as house property apart from land and building. So land means a land which is surrounded by a wall with or without roof. Having a roof is not necessary, with or without roof, but it should be surrounded by wall. So if there's a land like a farm, that is not eligible to be called as land and building. Land means a land which is surrounded by a wall. At least it should have a periphery. Then appurtenant to building, a land which is attached to the building. Appurtenant means attached to the building, like parking, approach road, backyard, etc. So vacant land is not house property. If the land is left vacant, it is not house property. What is building? Building means residential or commercial building, any kind of building. It should be a permanent structure, not a temporary structure. Okay, if you have constructed something temporary, that is not building. Roof not necessary for non-residential house property like stadium, swimming pool, etc. So it's not necessary that we should have a roof for certain commercial properties like stadium, swimming pool, etc. Incomplete or ruined house is not house property. So a house which is not complete, which is not completely made, that house property is not termed as house property. Or one which is ruined means which is under shackles, which is absolutely deserted, okay, remains of some old house property, that will not be termed as house property. So house property should be a proper house property. Then what do you mean by ownership? Now this is a critical one, guys. Ownership will include legal owners as well as beneficial or deemed owners, or any kind of owner which is beneficially using the property. So there are three aspects to ownership. Number one, legal owner. Legal owner is the registered owner which is there on the papers, okay, whose name registry is made for this particular house property, that is known as the legal owner or the registered owner. Registered owner is the first category of ownership. Second is the beneficial owner. Beneficial owner means the person who is currently not the legal owner or not the person having a registry, but he is enjoying all the benefits of the house property. He is known as the beneficial owner. So guys, usually registry takes a lot of time, okay, but before the registry takes place, sometimes the possession of the property is transferred to the future owner. In this particular case, beneficial owner will be chargeable to tax under the head house property. Chargeability will accrue to beneficial owner, despite of the fact that he is not the legal owner on the papers. So who is enjoying the property like an owner? Who's enjoying the property like an owner? He is the beneficial owner. Third is deemed or fictional owner. Third is deemed or fictional owner. In some situations, owner is Mr. A, but we will assume that owner is Mr. B. Let me repeat. In certain cases, owner is Mr. A, but we will assume that owner is Mr. B. So this is absolutely incorrect. This is absolutely wrong, sir. How can you assume someone else as the owner when A is the owner? How can you assume B as the owner? Guys, let me explain. There are certain cases where the transfer of property takes place, but in effect, the transfer has not taken place. I'll give you an example. Transfer to spouse, minor child without adequate consideration. So if you are transferring your property to a spouse or to a minor child without adequate consideration, you have not taken adequate consideration from your spouse or your child, in that case, we will deem you as the owner and not your spouse. So I'll give you an example. Mr. X transferred a property worth 1 crore rupees to Mrs. X at 10 rupees. Let me repeat. Mr. X transferred a property worth 1 crore rupees to Mrs. X at 10 rupees. Inadequate consideration. In this case, Mr. X will be deemed to be the owner of the property, although the legal owner of the property, the registered owner of the property is Mrs. X. We will refuse to take Mrs. X as the owner. Mrs. X is not the owner. Mr. X is the owner. Transfer of to spouse or minor child without adequate consideration. Then holder of impartible estate. So a person who is holder of impartible estate, an estate which is belonging to multiple people, that estate belongs to multiple people, but that estate is not partible. We cannot part the individual parts of that particular estate. So for example, there is a huge factory. 4 brothers own that factory. That factory is a consolidated unit. You cannot break that factory into 4 parts. All the 4 brothers are having equal share in that particular property, but the senior most brother, the elder most brother, is holding that particular estate and running that particular estate and has got the power from doing everything. So despite of the fact that the legal owners are 4 brothers in equal sense, but we will consider that brother who's holding this impartible estate as the owner of this particular property, because this estate is impartible. We cannot partition this asset into various parts. Therefore, the holder of the impartible asset, despite of the fact that that asset has got multiple owners, even despite of that fact, the holder of impartible estate will be the deemed owner. Next, property held by a member of a company or society or AOB under a house building scheme. Now, this is a very, very important aspect, guys. Sometimes the companies, big conglomerates, big MNCs provide facility to stay under the house building scheme to its employees. So, property which is held by a member of company, society or AOP. So, under the house building scheme, companies provide house to stay to the employees. Employees will get the house to stay, but the house is actually in name of the company and not the employee or not the member. But there is an agreement between company and the employee that over a period of time, some amount of salary will be deducted from the employees or members, or the AOPBOI partner who's there. The salary or their portion will be deducted, and the ownership will be transferred in their hands in long run. Sometimes this may happen. So under a house building scheme, if you hold a property, you means a member of a company or society or AOP, you hold some property. Actually, it is the owner of that property is AOP, but it will be deemed that you are the owner, because eventually you will be the owner. Eventually you will be the owner. The company has allocated that house to you and is withdrawing your salary every month, holding your salary for payment of that particular house. So in effect, that house belongs to you. So in case your property is held by a member of a company, society, OPBOI, under the house building scheme, then guys, it will be deemed that your property is in your name, in the employee's name, or in the member's name, or in the person who's having a society in his name. The property will be taken into consideration. Then person who holds property in part performance of the contract. So what happens is, sometimes a person holds a property under part payment of contract. I'll give you an example. So I have purchased a property worth 50 lakhs in Delhi. Okay, I have paid 20 lakh rupees to the seller, and I've told him, please transfer this asset to me. I will pay the property in a short while. I will pay the balance amount in the short while. Okay, so that person tells me that, okay, you pay the money, rest of the money in the short while, and we will transfer the asset in your name after that particular payment is done. All right, now the part payment has already been done. Person who holds the property in part performance of contract. So part payment has already been done, and I have been transferred the property, possession of the property, but the legal ownership has not been transferred to me. Even in that case, guys, I will be deemed to be the owner of the house property, and the income will be chargeable under my head, because part performance will definitely convert into full performance at one point in time. So even if you've done part performance of a contract, even then the property will be deemed to be your property for the purposes of income from house property. Then lease, which are for more than 12 years. If you are entered into a lease for more than 12 years, then we will deem that this property is your property. This property is not someone else's property. This property is your property. Then we will deem it. So Kirti Batra says, what if child is major and the property has been transferred without? Oh yes, in that case, the deeming fiction doesn't apply. In that case, the deeming fiction doesn't apply. Dhruv Jain, good morning. Dhruv Jain is late today. Capital gain will arise there on the basis of SDV. Where? Jyotish, where are you saying capital gain will arise? I don't understand your question. Capital gain will arise there on the basis of SDV. I don't know. Okay, next. One important aspect of taxing an income under the head income from house property is that house property should not be used for business purposes, should not be used for profession. If that house property is used for profession, if that house property is for business purposes, then guys, it will be taxed under PGBP head. It will not be taxed under house property head. So it should not be taxed. It should not be used under business or profession. So if the house property is used for purpose of business or profession, it is not taxable as income from house property. For example, letting out to employees, ancillary units, government agencies. So if you are using your house property for business purposes, it will not be taxed as house property. It will be taxed as income from PGBP. That is the point of consideration. All right, then guys, this is an easy topic. This is also an easy topic. I'll come to computation of income directly. All right, so let's start the computation of income of let out property. And yes, I'll be sharing these slide decks with you, so that there are small slides which are very easy. I mean, just look at this list. You must have already studied this list. Exempted properties, list of exempted properties which are exempt from income from house property head. So this list I'm not discussing in the live session, but I will provide this PDF to you. You please go through this list, because there's nothing to explain in this list. So I will provide the entire deck to you. Please go through this deck carefully. I'll directly come on to the most important calculation, guys. Most important calculation of your house property chapter. And yes, from an exam standpoint, it is very important from an exam standpoint, that you understand this calculation very well, because this calculation will form the basis of your a question which will come in the examination. This is the most important calculation which is there in your syllabus, and it will come to a very large extent. It will come for sure. I mean, there's no doubt about it that will come in your examination. All right. So let's start computation of income of let out property. So if you let out a property, then your computation of income will be there. All right. Now, my first question to you, okay? My first question to you. Income from salary. Okay, we have already studied income from salary. Your hands on the keyboard. Your hands on the keyboard and you have to answer me this question. Income from salary. Suppose someone is earning salary of rupees 7 lakhs per annum. Suppose someone is earning salary of rupees 7 lakhs per annum. But that person is capable of earning 10 lakh rupees per annum. According to his qualification, according to his experience, he is capable of earning 10 lakh rupees per annum, but currently he is at a salary package of 7 lakh rupees per annum. Please tell me what should be his taxable salary. Don't go into computation and all. Just tell me what is his taxable salary. Should it be 7 lakh or 10 lakh? Should it be 7 lakh or 10 lakh? That is the question that I'm going to ask to you. Please answer me in the chat box. Ravi, I will come to your question at the end of this lecture, okay? Difference between area-wise division and time-wise division. I will come to it. A person is earning a salary of 7 lakh rupees, but he is capable of earning, according to his qualification, according to his experience, he is capable of earning salary of 10 lakh rupees, but due to Corona, there was no avenue where he could earn his salary. Therefore, he accepted offer of 7 lakh rupees. What is his taxable salary? It is 7 lakh rupees. 7 lakh rupees. Mansi, Ishita, Nitish, Sri Lakshmi, Akanksha, Fawaz, Dhruv, Nagnath, Kirti, Meraki, Jyotish, Yashika, Gaurav, Vanshi, Deepika, Rajpurohit. Absolutely correct. Absolutely correct. Now my second question to you. My second question to you. Please listen to my second question very carefully. There is a house property. There's a house property. I have a house property. Where? In Lakshmi Nagar in Delhi. I have a house property in Lakshmi Nagar in Delhi. I gave that house property on rent at 15,000 rupees per month. I gave that house property on rent to some CA students or CMA students at 15,000 rupees per month. But I know that that building is capable of earning me 20,000 rupees. That building is capable of earning me 20,000 rupees. But as of now, since there was Corona time, so I compromised on my income. I said, okay, take the property in 15,000. I gave away the property in 15,000. The property which could have fetched 20,000 to me. Okay. My question to you is, what is the taxable house property? What is the taxable house property? Dhruv Jain. Any other answer? What is the taxable house property? Pankaj says 20,000. Sri Lakshmi 15,000. Kartike 20,000. Okay. Who else? Varsha 20,000. Oh my God. Varsha is online. Wow. Varsha has started studying back again for the June attempt. Brilliant, Varsha. So guys, Varsha is very, very active on Instagram. Her reels are very, very active and she's an Instagram star sort of. So she doesn't get much of time to study. But it is really good that she is getting time out of her busy schedule of having Instagram reels. She's having time to study. That is very, very good. Ravi says 20,000. Tadwai Nandini says 15,000. Vanshi says 20. Nitish says 20. Aditi Kumari says 20. Exactly, guys. Exactly my point. This is the basic difference between any other head and income from house property. Income from house property doesn't tax the actual income. It taxes the income which could have been received by the assessee. It doesn't tax the actual income. It doesn't tax the actual income. It actually taxes the income which could have been received by the assessee. It taxes actually the notional income. The income which could have been received by the assessee, that is taxable under the head income from house property, and that is the moot point of consideration. That is the moot point of difference between any other head and income from house property. So according to Income Tax Act, it says that income from house property will be taxable at an amount higher of what is actual rent or the rent which could have been received. Please understand these two concepts. Please understand these two concepts very well. Income from house property. I will tax rent. I will tax any property at a higher of the rent which has been received or the rent which could have been received. The rent which has been received or the rent which could have been received. Higher of both these amounts will be taxed as income from house property. That is the moot point of consideration in case of income from house property. Yes, that is taxing of notional income. This is known as notional income. I have earned only 15,000 rupees, but I am paying taxes on 20,000 rupees. Let me repeat. I have earned 15,000 rupees, but I am paying taxes on 20,000 rupees. That is the concept of income from house property. Very, very different concept from any other accounting, from any other head of income. PGBP, capital gain, income from other sources, salary. No other head talks about this notional income, but income from house property talks about notional income. It doesn't tax your income which is received. It doesn't tax your income which is received. It taxes your income which could have been received. That is the concept of income from house property. So let's start the computation of income from let out property. This is the way we calculate income from house property. So first of all, we calculate the gross annual value, which is known as the GAV. We will compute the method of computing GAV. We'll discuss it in a short while. Then we reduce municipal taxes from this GAV to get net annual value. Municipal taxes are taxes that are paid by the assessee. Advance tax is not deductible. So municipal taxes are reduced. Then we get a figure of NAV, net annual value. From net annual value, we deduct two expenses, okay? Sir, what if we incur any other expense apart from these two? Will it be allowed as a deduction? Answer is no. Only these two expenses are allowed as a deduction from income from house property. No other deduction is allowed from income from house property. Only these two are allowed as a reduction from income from house property. Standard deduction at the rate of 30%. Interest on loan under section 24B. This is allowed. Finally, we reach at the figure of income from house property. The final figure is income from house property. That is the residuary figure. And we apply tax rates on this particular final income. Now, in this particular session, we are going to deep dive into each of these things. What are these things? How are they computed? That is what we are going to discuss in this particular session. Okay, so context is set. And yes, Pankaj Kumar is absolutely right. Higher of RER or ARR. I'll tell you the full forms in a short while. All right. So the basic figure on which our income from house property is taxed is gross annual value. Now, what is this gross annual value? Gross annual value is a higher of actual rent receivable, the amount which has actually been received by you. For me, it was 15,000 in my example. 15,000 rupees has actually been received by me, or reasonable expected rent, the rent which I expect to be received, the rent which according to that particular area, Lakshmi Nagar, what is a reasonable rent which is expected out of me? That is reasonable expected rent. So this is the expectation. This is the reality. Whichever is higher is taxable. This is the expectation. What I should have received, what I could have received. This is the expectation. And this is the actual rent which is receivable. Higher of both of them will be taxable as gross annual value. Higher of both of them will be taxable as gross annual value. So higher of reasonable expected rent or actual rent received, higher of these two will be taxable as income from house property. Okay, sir. Now, sir, we very much understand what is actual rent receivable. Okay, sir, we have no doubt in it, sir. So it's very, very simple. Actual rent which has been received by me after giving this property on rent. This is very, very simple, sir. This is very, very okay. But, sir, how should we know the expected rent? How should we know the expected rent? What is the expectation of the rent? What rent is expected out of a property? How should we know that, sir? Now, to compute that, Income Tax Act has given you a formula. Let's see what is the formula. So reasonable expected rent is a higher of gross municipal value or fair rent. So what do you mean by gross municipal value? Gross municipal value means the municipality of that area must have fixed a particular rate for that particular property. That is known as gross municipal value. Whatever rent, whatever rate that particular area a municipality has fixed for this particular property, that is known as gross municipal value. And guys, this is given in law books. Okay, there are books which are there are acts, there are stamp duty acts, there are acts which are there. You will find this particular value from that municipal valuation book. Okay, next is fair rent. Now sir, what do you mean by fair rent? Fair rent means rent fetched by similar property in similar locality. So rent which is received in similar property and in similar locality, that is known as fair rent. So what do you mean by fair? Fair means reasonable. Okay, fair means reasonable according to that locality, according to that property. What should be the fair rent of this particular area? That is fair rent. Okay, so higher of fair rent, that will be the reasonable expected rent. But guys, this higher has to be subject to maximum of standard rent. So reasonable expected rent cannot be higher than standard rent. Sir, what do you mean by standard rent? Guys, standard rent means the rent which has been allocated under the Rent Control Act for a particular area. So what do you mean by Rent Control Act? So guys, when the country was liberated during independence era, at that point in time, state-wise rent control acts were implemented, whereby rent was sealed up to a upper limit. There was ceiling which is levied on rent. So rent of, say, Delhi, of central Delhi, and that to a particular district or area, cannot exceed a particular amount. That was the Rent Control Act. So Rent Control Acts, when they were implemented, they had a standard rent clause which said that the rent of this particular area cannot exceed this particular rent. That is known as standard rent. So the reasonable expected rent is higher of municipal value or fair rent, subject to maximum of standard rent. So first you will compare these two. First you will compare both of these. Then whatever is higher, you will compare it with standard rent, and it cannot be more than standard rent, right? That is the formula for reasonable expected rent. Now, there's one very important thing, guys. One very important thing. So standard rent is the maximum rent as per the Rent Control Act. So what do you mean by standard rent? It is the maximum rent as per the Rent Control Act. That is the standard rent. All right. So now we will compare these two figures. We know how do you compute reasonable expected rent. We know how to compute actual rent receivable. We will compare both of these, and whatever is higher will be the GAV, gross annual value. We will put this figure over here, and then we will reduce municipal taxes from this particular amount. We will get NAV. Then we will reduce the standard deduction at the rate of 30% of NAV, and interest on loan we will reduce to get income from house property. That is how we compute the income from house property. Okay, sir, got it? All right. So guys, we have already studied the income part of it. How is the income part calculated in case of a house property? How do you compute the part which is income part, which is gross annual value, net annual value? How do you compute that part? Now we come on to the two deductions which are there in house property income. Now please tell me, house property standard deduction is 30%. Okay, house property standard deduction is 30% of NAV. This is the law. Okay, your hands on the computer, your hands on the keyboard. All right, answer to my question. Okay, my question is, my actual expenses on maintaining this property is 40% of NAV. What deduction should I be allowed from NAV as standard deduction? Please write in the comment box. Please write in the comment box. Sahil Pahuja says hi. Hi, Sahil. Sahil has joined late. Please let me repeat my question, okay? I've already told you that standard deduction. I've already told you that standard deduction is 30% of NAV. Standard deduction is 30% of NAV. That is what I've already told you, okay? Please tell me if my actual expense which I'm incurring on this building is more than 30%. It is 40%. Then what will be the deduction which is allowed under standard deduction? What deduction will be allowed under standard deduction? Okay, perfect. Very good. Pankaj, Jyotish, Srinath, Nagnath, Deepak, Nandini, Kirti, Srinath, Nitish, Ravi, Vanshi, Kartike, Ravi Gupta, Gauravanand, Varsha, Kirti Batra. Perfect, perfect. Question number 2. Kartike, perfect. Question number 2. Dhruv Jain, perfect. Maximum is 30. Question number 2. Please listen to my question number 2 very, very carefully. My actual expenditure is actually 20% of NAV. It is lower than 30%. What will be my standard deduction? My actual expenditure is lower than 30%. It is only and only 20%. What will be my standard deduction? My actual expenditure is less. What will be the standard deduction? Surya Kiran says 20. Yashika says 30. Jyotish says 30. Vishnu says 30. Kartike says 20% only. Okay. Sakshi says 20. Srinath 30. Deepak says 30. Nandini 30. Ravi Gupta. So Nandini says 30%, sir, whatever. What is whatever? I don't understand what is whatever. Oh, Dhruv Jain says 20%. Srinath says 30. Deepika says 20. Sajan says 30. All right. So guys, please read to the words very, very carefully. Irrespective of actual expenditure. It doesn't matter whether my actual expenditure is 20% or 40%. It doesn't matter. The deduction, standard deduction which I'm going to get is always 30%. Examiner will try to confuse you by giving you actual expenditure which will be lower than 30% of NAV. Examiner might try to confuse you, but no, you are not going to get confused. Why? Because you know that standard deductions are always eligible irrespective of actual expenditure. Actual expenditure is to be ignored. So whether the actual expenditure is less, whether the actual expenditure is more, you will get a deduction of entire 30% of NAV. That is the answer. Okay. All right. Perfect. Right. Now I move on to the critical part. Critical part is interest on loan. Now, guys, if the property has been purchased or has been constructed using some loan from a third party and you are paying interest on that particular loan, okay, so naturally that interest is your expense. So I have constructed a house property using loan from ICICI Bank. I am paying interest to ICICI Bank. That interest which I am paying to ICICI Bank is an expenditure for me, is a deduction for me. So I'll be allowed that deduction under section 24B of the Income Tax Act, but subject to certain limitations. Okay. And now we are going to discuss the limitations which are there for allowing the deduction under interest on loan. So we start our topic of interest on loan. Now, before coming on to this particular topic, let me just give an example to you. Okay, sir. All right. So, guys, this is a timeline which I have created. Okay. This timeline starts over here, and then the timeline has various dates which are there. Okay. So I start with the date 1st April 2022. This is 31st March 2023. This is 31st March 2024. This is 31st March 2025. Okay. So I decided to build up a building and I decided to take up loan for that particular building. On 1st of April 2022, I decided to start a building. Okay. 31st March 2023, 31st March 2024, my building got completed in this particular year. In middle of the year, the building got completed. The building got completed on 15th of May 2023. The building got completed on 15th of May 2023. This is the completion date of the building. Building got completed on this particular date. Now, guys, I took a loan on 1st April 2022. So the period of interest would have started from 1st April 2022. So period of interest would have started from 1st April 22 and it would have extended till the time I repaid the loan. So suppose I repaid full loan on 31st March 2025. I repaid full loan. Full loan was repaid to me. So now interest is accumulated or interest is given for this entire period. if the interest is given for this entire period, guys, first of all, I need to bifurcate this entire period into pre-construction period or post-construction period, because I need deduction of the expenditure of interest, right? So first step that I'll take is I will divide this period into pre-construction period or post-construction period. Now, sir, what is pre-construction period? Guys, pre-construction period is before 15th of May 2023. So before 15th of May 2023 is the pre-construction period. But tell me something. Would it be difficult for you to compute the pro rata interest from 1st April 2023 to 15th May 2023? Will it be difficult to you? Yes, sir. Slight difficulty will be there. Some, but pro rata we will do, and we will compute the interest which is for this particular period. Okay, guys. Now I ask you another question. Suppose this date was not 15th May, it was 23rd May. Now tell me, would that prorata become a little more difficult? Yes, sir. Now that prorata will become more difficult because now we have to prorate on the basis of number of days. Sir, a very, very tedious task. Sir, a difficult task. So Income Tax Act has resolved your difficulties. Income Tax Act has made it very simple. What has Income Tax Act said? Income Tax Act has said that whenever your completion happens in middle of the year, whenever your completion happens in middle of the year or somewhere in the year, the immediately preceding 31st March should be taken as the completion date. So immediately preceding 31st March will be taken as the completion date. So this 31st March will be assumed as the completion date for ease of calculation. We don't want you to prorate the interest amount, okay? For ease of calculation, we are doing this to you. So immediately preceding part of 31st March will be taken as your completion date. So your pre-construction period will be from 1st April to 31st March 2023, and your post-completion period will be from 1st of April 2023 to 31st March 2025, till the time you repay your full amount of loan. I hope you can see the full chart now. Yes, you can see the full chart now. So the period from 1st April 2022 to 31st March 2023 is the pre-construction period. For ease of your calculation, the income tax had ignored the middle of the year dates which are there, pre-completion or post-completion. So they have ignored the part of the year. Part of the year has been taken as the full year of post-completion part, right? So whether it happens anywhere in this particular year, the pre-completion period will be 31st March 2023 only. Now I have a question. Suppose the actual completion date was 31st March 2024. Suppose the actual completion date was 30th March 2024. It has been shifted a bit, right? Now what will be the deemed completion date? Please answer in the chat box. What will be the deemed completion date if the completion has started on 30th, if the completion has been done, the building has been completed on 30th March 2024, then what will be the completion date, assumed completion date? What will be that? Please write in the chat box. I want the answer in the chat box. Perfect. Very good, Pankaj. Very good, Jyotish. Very good, Varsha. Superb. Very good, Rinki. Kirti Batra. Very good. No, Rinki is wrong. Ravi Gupta, very good. Aditi Kumari, very good. Gaurav Anand, very good. Superb, guys. Yes, guys, this is the moot point of consideration. Whether completion happens during middle of the year, beginning of the year, or end of the year, the completion date will always be assumed as the previous year end date. It will always be assumed as the previous year end date. Okay, sir, we got this concept. Now, sir, we didn't understand one very important thing. Yes, please tell me, what is that very important thing? Sir, why have we bifurcated our period into pre-construction period and post-construction period? Why have we bifurcated, sir? What is the use of bifurcating this two periods? So guys, I have a question to you, okay? Building got completed in the year 2023-24. Okay, building got completed somewhere in the year 2023-24. Now please tell me, interest was being incurred from this particular year. But building got completed in this year. Please tell me, from which year will the income accrue from this property? From which year will the income accrue from this particular property? Will it be the year, I'll give you two options. Will it be financial year 2022-23, or will it be financial year 2023-24? What will be the year from which the income will start accruing? Will it be the year 22-23? Will it be 22-23, or will it be 23-24? When will income accrue? From which year will the income be accruing? From which year will income accrue? Income from house property will be taxed. Financial year 22-23 or financial year 23-24? Which year? Pankaj Kumar. Very good. Kartike. Very good. Perfect. Perfect, guys. The income will start accruing from 23-24. So tell me something. If the income will come from 23-24, if the income will come from 23-24, that means income of 22-23 will be zero. Then is there any use of deducting interest from this income? Because the income is zero. When the income is zero, how will you match your expenses and income? So the pre-construction interest will go for a waste. Pre-construction interest will go for a waste. Therefore, what will we do? We will accumulate the pre-construction period and we will allow it as a deduction in the subsequent period, which is the post-construction period. Please understand the logic. Why are we doing it? So that you are able to remember it well. Why are we accumulating pre-construction period interest? Please understand the logic. Only then you will be able to remember it. So pre-construction period, there is no income, there is zero income. When there is zero income in pre-construction period, guys, then it will be difficult to have a deduction, because deduction can happen only when there is income. Some expense will happen only when there is income. Okay, when there is no income in this particular period, the pre-construction period, then there's no use of interest, there's no use of deduction. So what will we do? We will accumulate the pre-construction interest and we will allow it as a deduction in post-construction period. Post-completion period, we will allow it as a deduction. That is the reason why we bifurcate the interest into two parts: pre-construction interest, post-construction interest. Okay, sir, got it. All right, let's come back to our main calculation, main concept, guys. And the main concept is that we have to allow interest on loan. Interest on loan is to be allowed by us, and interest on loan is to be reduced under section 24B. All right, acquisition, construction, repair, reconstruction of the property. These are the purposes for which interest on loan is allowed as a deduction. There are three uses to it. Pre-construction period, interest will be there. Post-construction period, interest will be there. Pre-construction period will start from commencement of construction or date of borrowing, whichever is later. So commencement of construction, whenever the construction will commence, or whenever the borrowing is done, whichever is later is the start date of pre-construction period. The end date of pre-construction period is 31st March of the financial year prior to the year in which construction completes. So the year in which construction completes, immediately preceding year end is the completion date of pre-construction period. Amount of deduction: accumulated interest to be allowed in 5 financial years in the year of construction completion. So after the construction completes, after that, in 5 years, the accumulated interest is to be given a deduction for. So pre-construction period is reduced after the completion of the building. After the building is fully completed, only after that, pre-construction period interest will be allowed as a deduction. Then what about post-construction period? Guys, post-construction period means income is accruing in that particular year, right? So whatever interest is accrued, that is allowed in the same year. Okay, yes, sir. When will the year start? It starts on the 1st April on the financial year in which completion completes. So whenever the construction completes, the beginning of that year will be treated as the post-construction period. End date will be when the loan is fully repaid. When the entire loan is repaid, then it will be the end of construction period. Then amount of reduction is allowed in respective year on an accrual basis. So every year, each year, the interest will be allowed as a reduction of post-construction period. So each year, the amount is allowed as a deduction. Okay, sir, got it. So this was interest on loan part of it. Okay, sir. All right. Now we come on to the self-occupied property, and I know you are very emotional about the self-occupied property. You are very emotional about the self-occupied property. So before I start the section, okay, before I start the section, let me have an emotional voting from all of you. Please be as emotional as you can and vent out your emotions, okay? My question to you is, the property which is self-occupied by a person, that particular property should be taxable or it should be not taxable? Please answer in the comment box. I'm talking about self-occupied property. I'm not talking about let out property. I'm talking about self-occupied property. Please answer my question whether the self-occupied property should be taxable or should be not taxable, according to you. And you can have your emotions in place, okay? The emotions which you showed in the beginning of the session, those emotions, I want them back. Self-occupied property, property which you own, which you stay in, should it be taxable on the expectation that what rent would have been fetched if this property was given on hire? Should it be taxable or should it not be taxable? That is the question which I'm asking. Everyone is saying a no. Everyone is saying a no. All right. Dhruv Jain has become actually emotional. He's sending an emotional emoji along with no. Dhruv Jain is actually emotional. Mayur Shah saying no. Kirti Batra, Siddharth Gupta, Karishma, Gadda, Midi, Surya Kiran, Siddharth Gupte, everyone is saying no. Ravi Gupta, not taxable. Okay. So I'll tell you what. You are over smart people. How are you over smart people? You are over smart because if you have, say, 4 house properties and you are aware that out of those 4, if you stay in one of them, balance 3 are given on rent. If those properties which are given on rent are shown as let out property, then they will be taxable. And if they are shown as self-occupied property, then they will not be taxable. You know about this particular fact. You know about this particular thing. Then guys, you will become more smart. What will you do? You will disclose that all the properties are self-occupied properties. All the properties are self-occupied properties. That is the tax evasion which you will do. That is the tax evasion which a normal person does. If he has 3 or 4 properties, some of them might be vacant also. They would say that, oh, all of them are my self-occupied property. That is incorrect. So Government of India says it respects your emotion. First of all, first things first, self-occupied property should not be taxed. Government of India agrees with it. Government of India agrees with it. Self-occupied property should not be taxed. Government of India agrees with it. But only to the extent of 2 self-occupied properties. So, first of all, let me tell you, fully self-occupied property, NAV is 0 up to extent of 2 self-occupied properties only. So, only 2 self-occupied properties will be tax-free. NAV 0 means tax-free. There will be no NAV. There will be no NAV. So if there is no NAV, there's no tax, right? So Government of India is saying, we accept your emotions. You are emotional person. We accept your emotions. Your emotions are absolutely correct. We don't mind giving you a relief on self-occupied property. But don't be over smart. Don't be over clever. Only 2 properties, only 2 self-occupied properties will be exempt from tax. So NAV is 0 only up to the extent of 2 self-occupied properties. NAV will be 0 only to the extent of 2 self-occupied property. If I have 3 self-occupied properties, and yes, there can be a situation where I have 3 self-occupied properties. I have a big family. I have a huge family. So, I have 3 wives. Yes, I have married thrice. Please don't say that, sir, legally it is not possible or whatever. I'm not talking about legal thing, but I'm talking about emotional thing now. I have 3 wives. So I have 3 houses allocated to them. 1 week I stay in one house, second week I stay in second house, third week I stay in third house. I have 3 houses. I have 3 wives. All 3 of them are self-occupied by my family. It's all my family. But Government of India is saying we will treat only 2 out of these 3 as self-occupied, and we will give a tax freedom to only 2 out of 3 of your buildings. We will not be able to give tax relief to the third building. Only 2 will be considered as NAV as no. All right. Yes. Then what happens if the property is partly self-occupied and is partly used for some other purpose? If the property is partly self-occupied and it is partly used for some other purpose, then what will happen? Karthikeya is saying, Chota Parivar, Sukhi Parivar. Try it. Karthikeya, have you already tried? I think Karthikeya is already having a chota parivar. He's married. I think he's not a CMA student. Huh? He's already married. He's got experience. That's why he's saying try it. Okay. Now the question is, what happens if the self-occupied property is partly self-occupied and partly vacant? Then guys, if it is partly vacant, so suppose a property has two floors, one floor is occupied by the owner, second one is vacant, then guys, it is treated as fully self-occupied property. So entire property's value is 0. Property let out, half property is self-occupied, half is let out. Then what happens? Partly treated as self-occupied and partly treated as let out. So we will divide the income into two parts. Partly self-occupied, that income will be exempt from tax, and partly let out, that income will be taxable. Third is partly used for business and partly used for self-occupation. Then what happens? Partly treated as self-occupied and partly treated as PGBP income. So we'll treat it as partly. We'll divide the entire value into two parts. First part, self-occupied, will be exempt. The second part, which is PGBP or let out, that will be taxable. Okay, sir. Then monetary limit on interest on borrowed capital for self-occupied property. Now this is very, very important, guys. And let me reiterate. The interest which is taken on let out property, interest on loan which is taken on let out property, that interest is eligible for a deduction for an unlimited amount. Okay, there's no restriction on the amount of deduction. So loan interest can be 10 lakh, 20 lakh, 30 lakh, any amount of interest will be allowed as a deduction. But in case the loan is taken for self-occupied property, if the loan is taken for construction or purchase of self-occupied property, then the interest on loan is restricted to a certain amount. Loan or capital borrowed for acquisition or construction, if the loan is borrowed for acquisition, or if the loan is borrowed for repair, renewal, and extension. If the loan is borrowed for acquisition or construction, then if you fulfill these three conditions, then the loan interest will be eligible up to 2 lakh rupees. If you do not fulfill these three conditions, then the loan will be eligible only for 30,000 rupees. And if you have taken loan for repair, renewal, and renovation, then only 30,000 rupees deduction will be eligible for interest. In case of let out property, unlimited amount, guys, unlimited amount. 2 lakh, 3 lakh, 4 lakh, 20 lakh, 50 lakh, 100 lakh, 10 crores, whatever interest you are accruing, entire amount will be allowed as a deduction. But in case of self-occupied property, there's a restriction of 2 lakh rupees on the monetary amount of deduction for interest on loan. So what are the three conditions? Three conditions are: loan should be taken after 1st April 1999, and means cumulatively all three conditions should be satisfied. Construction should have been completed within 5 years, and third, certificate from the lender regarding utilization of loan should be acquired by you. If these three conditions are satisfied, then the interest will be allowed to the extent of 2 lakh rupees. Otherwise, the interest will be allowed to the extent of 30,000 rupees. So yes, you might have incurred interest of say 6 lakh rupees per annum, but the deduction will be eligible only for 2 lakh rupees per annum. You might have incurred interest of 4 lakh rupees per annum, but the deduction will be only restricted to 2 lakh rupees per annum. Now my question to you is, your hands on the keyboard, okay, your hands on the keyboard, please answer my question. The actual interest paid by you is 1,50,000. You are fulfilling all the three conditions. What is the eligible deduction? Is it 1,50,000 or is it 2 lakh rupees? The actual interest which is incurred by you is 1,50,000 rupees. The deduction which is allowed is 2 lakh rupees. You are fulfilling all the three conditions. What will be the deduction which will allow to you? Will it be 1,50,000 or will it be 2 lakh? Because guys, in standard deduction, although the actual expenditure was less, even then I allowed 30%, right? That is why I'm asking this question again to you. Will it be 1,50,000? Will it be 2 lakh? Actual expenditure is 1,50,000. So what will be the deduction? Yashika, Srinath, Mohammad Azam, Aditi Kumari, Karishma, Deepika, Kirti, Kartike, Preetam, Nitish, Jyotish, Israt, Ravi Gupta. Perfect, guys. Your answer is absolutely right. The answer is 1,50,000. Guys, it is only and only in case of standard deduction that we forget about actual expenditure. It is in the case of standard deduction that we forget about the actual expenditure. In case of any other deduction apart from standard deduction, we take care of the actual expenditure as well, and the deduction is limited to actual expenditure. So the actual expenditure, which is 1,50,000, is allowed as a deduction in this particular case. If the actual expenditure is less, then we are going to allow lesser amount of deduction in this case. That is the thing. Okay, sir, got it? Okay, this box is important. In case of let out property, there is no limit on deduction on interest. So interest deduction will be allowed for an unlimited amount if the property is let out and not self-occupied. Okay, sir, got it. Then last topic of our syllabus, guys. Last topic, what will happen if past rent is recovered? Last topic, what happens if past rent is recovered? Recovery of unrealized rent, section 25A. If past year's rent is recovered, past year's rent 2 lakh rupees was due to be received by us from our tenant. Tenant didn't give us at that point in time, but now tenant has given it back to us. It may be for the reason of court case has been adjudicated in favor of us. It may be the case that the tenant has got some realization, some oman or some babaji or guruji has given some guidance to tenant that don't have any dues on your head, that will you have to repay that in your next birth. Some babaji must have some guruji must have given this pravachan, given this seek to our tenant, and tenant gave us our rent which was due 2 years back. Okay, it was areas of 2 years back. The tenant has given us our rent back. What will happen of that particular Muhammad Azam says, if actual expenditure is more than 2 lakh, then 2 lakh exemption, 50,000. So yes, Azam, absolutely right. If the expenditure is 2 lakh 50,000, then 2 lakh will be allowed as a deduction. Deduction will be 2 lakh. 50,000 will be waste. 50,000 will not be allowed as a deduction according to Income Tax Act. So yes, the recovery of unrealized rent is taxable in the year of receipt after allowing standard deduction of 30%. In the year of receipt, you will allow this particular deduction, and yes, standard deduction of 30% will be allowed to you from this particular income. Taxable on cash basis. This is the first parameter, that it is taxable on cash basis. Taxable in the year of receipt, even if recipient is not the owner in that particular year. So guys, there's a possibility that in that particular year you might have sold off that particular house property. You are not the owner of that house property in the year in which your tenant is giving you the rent, because you have sold that property long back. Okay, so at the time when you had this property, at that point in time, tenant didn't give you the money, but now when you have sold this property, tenant is giving you the money, arrear money of last year's. It doesn't matter whether you are the owner of that particular property in the current year or not. Doesn't matter. You will be allowed you will have to charge this income and under income from house property after giving standard deduction of 30%. No other deduction is allowed. So no other deduction is allowed. So if you ask me, interest on loan, no, it is not allowed. Interest on loan will not be allowed if it is a case of unrealized rent. So yes, guys, this was our chapter on income from house property. In brief, I've tried to touch upon all the critical aspects of this particular chapter. All the important top points of this particular chapter I've tried to touch base upon in this particular session. If you like this session, then please hit a like button. Please hit a like button. That will definitely motivate me in continuing this particular series. And yes, I'm enjoying myself, guys. I know what about you, whether you are enjoying or not, but I'm enjoying this series a lot. Coming live before you every Tuesday and Thursday for intermediate students, and for final students on Saturday. It is an amazing feeling. And yes, in the morning we are all fresh, our minds are fresh, so we are very receptive on the concepts. So concepts which you are discussing with me in the morning, they will be in your mind till your entire life. I'm enjoying these sessions a lot. Please give me reviews on how do you like these sessions, and in the comment box, please tell me if you have any specific requests, if you have any suggestions, if you have any improvement scope. And yes, everyone can improve. I can also improve. I'll have better better kind of sessions with you. If you have any suggestions, please drop your comments in the comment box. And yes, do like this video. So yes, test house property test this Sunday. What is the date on Sunday? Sunday is 3rd of April 2022. Yes, 3rd of April 2022. 3rd of April 2022. Income from house property test. Test will be given on this mobile number 9643929913. Please get yourself added on the WhatsApp group which is there on this mobile number. Please get yourself added on that WhatsApp group. And yes, be prepared for the test which is there on 3rd of April 2022, 7 p.m. evening. We'll have the test of entire house property chapter, and these notes will be provided to you on the WhatsApp group. So yes, Yes, Varsha, previous year questions should be done. Definitely. They should be done. Your scanner, you should go through that scanner and do the previous year questions also. Absolutely. This should be done. After completing the notes which I've given to you, you should do previous year questions. So yes, guys, that's all for this particular session. We'll be meeting in our subsequent sessions, and we'll be meeting in our subsequent videos. The next chapter which I'm going to start is by far the lengthiest chapter of your syllabus, which is PGBP. I'll be starting PGBP in the next week. So yes, let's start PGP in the next week. This week is dedicated to house property income. So please prepare house property well. A very small chapter, a very limited chapter, and the chapter which will have a reasonable level of marking in your examination. So prepare that well. Next week, PGP sessions we are going to start. Till we meet next. All the very best and happy studying. Bye-bye. Thank you so much for joining.